A contract is a legally binding agreement between two or more parties where each party promises to fulfill certain obligations. Parties to a contract can be either people or businesses. Contracts typically include certain information such as the parties involved and the terms and conditions of their agreement. All parties need to be legally able to enter a contract, which means they must have capacity to enter into the contract. Parties should also enter the contract voluntarily. There are different types of contracts that a person or business might enter into. These include employment contracts, insurance contracts, hire purchase contracts, lease contracts, and rental agreements. An employment contract is a legally binding agreement between an employer and an employee that outlines the terms and conditions of employment. Employment contracts must be aligned with the Basic Conditions of Employment Act, which outlines the minimum acceptable standard for employment contracts. Aspects included in an employment contract include the employer's details, the employee's details, the job title and job description, and working hours and days of work. An insurance contract is an agreement between the insurer, the insurance company, and an insured party, a business or policyholder. The insurance contract stipulates that financial risks are transferred from the insured to the insurer in exchange for monthly premiums paid by the insured. The insurer will indemnify the insured against any insurable risks. These are the differences between personal and business insurance. With personal insurance, the policyholder is an individual and the agreement relates to issues affecting individuals. Examples include life insurance, home and content insurance, and disability insurance. With business insurance, the policyholder is a business that wishes to protect itself from insurable risks related to the business. Examples include property insurance, general liability insurance, and vehicle insurance. When it comes to insurance contracts, both parties have certain responsibilities. The insured is responsible for reading and understanding the contractual implications of the insurance contract, providing honest and accurate information to the insurer. The insurer is responsible for explaining the contractual terms and conditions of the insurance contract to the insured, honoring all promises stipulated in the insurance contract and processing claims quickly and fairly. A hire purchase agreement is a contract between a customer and a business where the business sells assets on credit in exchange for monthly installments. Customers purchase expensive assets, machinery, and technology on hire purchase as the cash price of these items is unaffordable. The assets become the ownership of the customer only once the final installment is made. Leasing refers to a contract where the lessee rents or hires assets like equipment and technology from the lessor at a certain monthly cost. The parties involved in leasing are the lessor, who provides assets to the lessee, and the lessee, who pays monthly premiums to the lessor. Both parties in a lease contract have certain obligations. The lessor must ensure that the asset or property is available at the agreed date and that it is in good condition at the time of the agreement. The lessee must pay the agreed premium timeously to avoid breaching the contract and must take good care of the asset during the lease period. A rental contract is an agreement between a landlord and a tenant where the landlord allows the tenant to occupy the landlord's property, typically a house or flat, while the tenant pays monthly rent and ensures that the property is looked after and not damaged. Both the landlord and tenant have obligations regarding rental contracts, which include the landlord being responsible for major maintenance of the property and not disturbing the tenant unreasonably. The tenant must pay rent timeously and must leave the property in the same condition it was in when they took possession of it. These are some of the legal implications of contracts. The parties entering into a contract must have contractual capacity. The agreement must be reasonable. The agreement must be legally viable, and the terms and conditions must be certain and not vague or unclear. The contract should also clearly describe the rights and responsibilities of each party. such as acknowledging that once an offer has been made and accepted, the contract is binding and enforced by law, and acknowledging that if any party breaches the contract, the other party must be compensated for any losses they incur.